Hey people, I welcome you back to Caroline's Online Academy. We are in the series of videos in which we are solving previous year questions and board examination questions and sample paper questions from the chapter Dissolution of Partnership form. Today I'm here with the question from Compartment 2022 examination. It is a 5-mark question. In this question, you're required to prepare the realization account. Without further ado, let's go ahead and start solving the problem. B, C, and D were partners in a firm sharing profits and losses in the ratio 2:2:1. On 31st March 2022, their balance sheet was as follows. Sundry creditors is a profit and loss account, capital, BCD, and then we have bank debtors, provision for doubtful debts, stock is there, furniture is there, land and building is there. And we have a lot of adjustments. As I told you before, we don't even have to look at the adjustments. Understood, my dear children? If you're told to prepare the realization account, even before you look at the adjustments, you go ahead and transfer these things to the assets and liabilities to the realization account. We'll start with the assets. Obviously, we'll not transfer bank because they're actually transferring everything to realization account to sell everything and then convert it into the cash only. So we're not going to transfer bank. When it comes to debtors, we'll transfer the gross amount only, not the net amount. The gross amount here is 2 lakh. When you deduct provision for doubtful debts of 5,000, you get the net amount of 1,95,000. When you transfer to realization account, you're supposed to transfer the gross amount of debtors, and provision for doubtful debts will be transferred as a liability. So I always recommend my students to do it right away instead of doing it along with other liabilities. The moment you transfer debtors, immediately you post to the credit side of the realization account the provision for doubtful debts. And then the next thing to be transferred is stock account, which is 4,50,000. And then we have furniture to furniture, and that would be 60,000. And then we have land and building to land and building, 11 lakh. Understood or not, my dear children? So we've transferred all the assets now. After transferring all the assets, just add them and write in the outer column. Next thing to do would be to transfer all the liabilities. The rule is very simple. All third-party liabilities will be transferred. Investment fluctuation fund will be transferred. Workman compensation reserve will be transferred to the extent of claim. Understood or not? So here we have sundry creditors, profit and loss account, and capital on the liability side. So it's just creditors, that is third-party liability. So I'm just transferring creditors. Profit and loss account is obviously a reserve, so it won't be transferred. And sundry creditors are how much? 1,20,000. So after transferring the liabilities, again you add them up and write in the outer column. Then we go to the adjustment. Debtors were sold to a debt collection agency at 10% less than the book value. So debtors have been sold at 10% less than the book value. So when you realize an asset, you get money in the bank. Am I right or not, my dear children? So bank is an asset that increases. So we debit bank account and it's an income for the firm. So all income will be credited to nominal accounts, and the only nominal account that is available during dissolution is realization account. The realization account will be credited. The journal entry is bank account debit to realization account. And for keeping track of how much each asset realized, what we are going to do is we are going to write buyback and below that debtors. Now debtors realize 10% less than the book value. The book value of debtors is how much, my dear children? 2 lakh. It realized 10% less. 10% of 2 lakh is 20,000. So what it would have realized is 1,80,000. Understood or not, my dear children? So I'm going to write 1,80,000 against debtors. And the next thing is stock rupees 2 lakh was taken over by B at 90,000 less than its book value, and the remaining stock realized 1,80,000. Now, when you see sentences like this, you're not supposed to panic or anything. You just have to divide it into two. Okay. Now, stock of 2 lakh was taken over by B. So that is a case of partner taking over the asset. When we sell the asset, the journal entry is bank account debit to realization. When the partner takes over the asset, bank account is not debited because partner will not give money, but realization account will be credited. Instead of bank account, partner's capital account will be debited because when the partner takes over the asset, the amount payable to the partner decreases. Understood or not, my dear children? So now the journal entries, partner's capital account debit to realization account. So in realization account, I'm going to write by B's capital account. If you notice, I'm actually leaving some lines below by bank after debtors when I'm entering this. The reason being, there might be other assets that might be realizing, and I might be writing those things here. It's always safe to leave some 4 or 5 lines below by bank. When partner takes over assets, such adjustments come, you leave 4 lines below by bank and then record it. So it was stock of 2 lakh was taken over by B at rupees 90,000 less than book value. So the 2 lakh stock he's taking at a price at 90,000 less than its actual price. So he'll be taking it for what? 1,10,000. So by B's capital account 1,10,000. Remaining stock realized 1,80,000. So remaining stock was sold for 1,80,000. All you have to do is stock 1,80,000. Journal entry is bank to realization, and that's what I'm doing. Furniture was taken over by C for rupees 65,000. So C is taking over furniture. So we're going to write by C's capital. The journal entry C's capital account debit to realization account, and he's taking it over for 65,000. So I'll just record 65,000. And then creditors were paid 10% less in full settlement of their amount. So creditors are being paid 10% less. When you pay, the journal entries realization account debit to bank account. Bank and asset is going outside, so it will be credited, and realization will be debited as payment of liability is a loss for the firm. Understood or not? So the journal entry will be to bank, and just like how we wrote it on the asset side, we will write on the, just how we wrote it on the credit side. On the debit side also, we'll write to bank, and in order to keep track of what we have settled, we'll write creditors below to bank and write in another column. So that will be 1,20,000 into, no, how much were they paid? They were paid 10% less. Am I right or not, my dear children? The total creditors are 1,20,000. 10% of 1,20,000 is 12,000. And therefore, creditors would have been paid how much? 1,20,000 minus 12,000, which is 1,08,000. Understood or not, my dear children? Okay, good. Land and building realized 18 lakh. So an asset realized, journal entry is bank account debit to realization account, and you'll write land and building 18 lakhs. I think it realized 18 lakhs, right? Yeah. B was assigned the work of dissolution for which he was to be paid rupees 40,000. So we have to pay B. B is doing the realization work, dissolution work, and therefore we have to pay him remuneration of 40,000. So paying remuneration for dissolution is an expense. So expense will be debited to realization account because that is the only nominal account available. And if it is paid by the firm, the journal entry will be realization account debit to bank account. But if it is payable to a partner, we will write realization account to B's capital account. We'll create the liability in the partner's capital account. So to B's capital account 40,000. Now the problem does not get over here. Just because you have run through all the adjustments, it doesn't get over there. You go through the balance sheet and check if you have realized all the assets or not. Have you realized debtors? Yes, you have realized debtors. What about provision for doubtful debts? Yes. You've transferred it. We don't have to pay provision for doubtful debts to anyone. It's an internal liability, and therefore that's also done. Stock, yes, done. Furniture, yes, done. Land and building, yes, done. Sundry creditors, yes, paid. Profit and loss account will not form part of this and will not form part of this, so no problem. We have completed everything. All that is left is to, tally the ledger account and find out if it is profit or loss. Understood or not, my dear children? So what we see here is we have 18,50,000 on the debit side and 3 lakh on the credit side, but that's only because I have not added this and written it on the debit side. So now we have this 1,08,000, nothing to add here. So we just write 1,08,000 on the outer column. So we have 24 lakh 60,000 on the credit side and 19 lakh 58,000 on the debit side. The difference would be 2460 minus 1958 is the difference would be 5 lakh 2,000. It happens to be the correct answer, my dear children, as per the suggested answers. Just check. So the balancing figure will be written on the debit side. It's profit. Profit will be distributed to the partners. So to partners capital account, B, C, and D. And the profit will be distributed in their old profit sharing ratio. The old profit sharing ratio happens to be 2:1 in the question. Was given in the first line of the question. So that 5 lakh 2,000 will be distributed in the ratio 2:1. Understood or not, my dear children? That's it. With that, we have come to the end of this problem. All of these realization account problems are going to be easy only. As I told you earlier, in sample question paper problems, they are a little lengthy because they actually want you to understand. They want you to, learn how to do the sample question papers. Understood or not, my dear children? Whereas they want to teach you various adjustments in the particular chapter. So they give a lengthy question in which they try to put all the adjustments inside. However, my dear children, when it comes to board examination question, the adjustments are going to be limited and they're going to be simple, just like this problem, and it will be easy. All the best to you people, and please share, subscribe, like, and leave a comment. It will encourage me. See you again in next video with another problem. Hopefully, we'll finish the solution soon and start changing profit sharing ratio. People take care, have fun, and bye.